so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to talk about what Federal Reserve Chairman Jerome Powell said at his last press conference. Did the Federal Reserve successfully make a new bottom for home prices? And think about that for a second. The new bottom, right? This new bottom would have to have been built off the backs of the most qualified buyers pretty much in our nation's history. Meanwhile, they have put on timeout all of the locals, and then add on top of that the 40 to 50%, depending on the metro area, run up in equity over about 2.5 years. To me, all of these things are signs of a weak, fragile housing market that's built on a house of cards. Now, the crazy thing about this year is the housing market has been propped up more than I originally anticipated. Again, the propping up coming from, in my opinion, the $400 billion of liquidity or quantitative easing that the Federal Reserve injected back into our economy, or rather the financing sector, back in March of 2023 or March of this year. And just real quick, if you guys can, just hit the like button real quick if you can. I'm not going to be overly dramatic about asking you guys to like this video, subscribe if you haven't already, shoot me a comment below, and share this video. But either way, I really hope you enjoy. We're going to dig into an article from Fortune. It does require a subscription, but I'm still going to give you guys the link. You guys could just watch this video, but if you want to go back and check out the data, as always, I always try to give you guys at least the link to the data so that you can formulate your own opinions based off of the data. The name of this article from Fortune is Fed Chair Powell equals the U.S. housing market is putting in a bottom. Now, initially that could sound extremely scary, but I'm saying is the so-called bottom is just adding to the house of cards. The foundation is not there. The fundamentals are not there. Again, unaffordability, equity run up, interest rates were too low for too long. So what are people thinking right now? That the housing market is just going to naturally fix itself? Is that what people are thinking? But because what I think is the unfortunate thing about all of this is there will be continued pain throughout the economy. Fed Chair Jerome Powell took the podium on Wednesday to announce that the central bank would hold interest rates flat in June. Powell didn't rule out future hikes and called this move a skip, not a pause, although he used both terms, but let's just call this a skip. So they're skipping rate hikes just to see what other parts of the economy potentially break before they go and resume the rate hikes. Towards the end of the press event, Powell was asked to give an update on the nation's most interest rate sensitive sector, the U.S. housing market. And the reality is he was actually asked multiple times through that press conference specifically about the housing market. Unfortunately, instead of really addressing that, he kind of looked at his notes and he started reading off of pieces of paper. Housing is certainly very interest rate sensitive. It's one of the first places that is either helped by low rates or held back by higher rates. And we certainly saw that over the course of last year. We now see housing putting in a bottom and maybe moving up a bit. We're watching the situation carefully. I do think we'll see rents and house prices filtering into housing services inflation over a housing cost as tracked by CPI. And I don't see them coming up quickly. I see them wandering around at a low level. Essentially what he's saying is some increase is okay, but overall what he's expecting is that prices are going to basically be plateaued for quite some time. Again, as a result of the overwhelming unaffordability. Now, it faltering like that does not mean there's a new bottom. We don't know until we have a full cycle from January to December. And essentially what has to happen is normal seasonal trends need to be broken. When normal seasonal trends are broken, then we know what they're doing is working. And we broke normal seasonal trends like he mentioned last year. Now, unfortunately, the start of this year around the end of February is those normal seasonal trends took over the housing market again. And it was inflamed by the lack of inventory in the market, which has been incredibly sideways, except, and don't forget this, new home construction. And also don't forget this, these new home builders are not listing all of the properties they have for sale on MLS or the multiple listing service. So there's quite frankly a lot more inventory than what is being reported. Powell didn't specify if he thought U.S. housing market activity had bottomed. And that's my point I'm trying to make. Even they can't say that. So all of the realtors that are saying, congratulations, the housing market's strong, we hit bottom, you better buy now or it's going to be too late, don't know what they're talking about, but I know what they're talking about. They're talking about lead generation from you. Those types of statements are designed to get their phones to ring. That said, both have seen a little improvement this spring following last year's home price correction, which was particularly sharp in overheated Western housing markets, and last year's sharp pullback in home sales. Indeed, after falling for 7 straight months between June 2022 and January 2023, U.S. home prices, as measured by the seasonally adjusted Case-Shiller National Home Price Index, rose in both February and March. Meanwhile, both existing home sales and new home sales have improved since bottoming earlier this year. I get all kinds of crazy comments from trolls and realtors and investors and other YouTubers that basically say, Travis, I've been watching you for 2 years. You've been wrong the whole time. Like, how dare you, right? And I roll my eyes, you guys, because I've been doing this. I've been doing this for 15 months, not even a year and a half yet. And think about this. Of those 15 months that I've been doing these videos, 7 of those months we had price decline that exceeded normal seasonality. What do we think is going to happen when that normal seasonality around July through October, what's going to happen then? I think what's going to happen then is the same thing that happened last year. I think we're in for additional deflation in the housing market. So here's a month over month change in home prices from the Case-Shiller. And the Case-Shiller, kind of like Zillow, comes up with their own way of valuing property. So we don't have to just be at the mercy of average or median sales price. And again, you guys can see 7 months straight. So 7 months straight of decline. It exceeded 2006 price decline. Now, back in this time here, and I hope I can zoom in enough, this is when Ben Bernanke and the Federal Reserve was like, it's okay, keep buying, everything is fine. And then look at this rally right here. So there was a rally followed by unprecedented home value decline. And really, the Federal Reserve chairmen basically are saying the same thing, that everything's all right. And don't worry, they got it under control. Also, what's intriguing, regardless of what I almost said Dave Chappelle, I mean, they're similar, but Dave Ramsey got jokes as well. And I would argue he actually is funnier than Dave Chappelle with the ridiculousness that he continues to say. But despite him saying that home prices have only gone down one time in 2008, he's lying to you because that is the narrative he needs to push to continue to make tens of millions of dollars off of the backs of potential homeowners. But regardless, looking here, negative decline in the late 80s and early 1990s. Do y'all see that? And then it rebounded, followed by another decline, rebounded, and another decline. Then look at these slight rebounds here, and then another slight rebound the next season, and then another slight rebound the next season. So if you really look at the great financial collapse, you can actually see that seasonality come into play right here. And that's why you see those positive home price increases despite these massive declines right here. And that's what I would kind of explain as a dead cat bounce. Like I said, it's not the stock market, so we shouldn't even use the terminology dead cat bounce here, but seasonality, okay? So seasonality, dead cat bounce. So can we say that? It's a seasonality, dead cat bounce in real estate. At least that's what I'm thinking. Powell's housing bottom comment on Wednesday is a stark contrast from last year when the Fed chair repeatedly made bearish housing comments. And to be honest, guys, I miss that guy. We're left with a shell of who that person once was. Maybe. First, in June 2022, Powell told reporters that spiked mortgage rates would help to reset the housing market. Do y'all remember the word he used, reset? So I'm not really understanding what has been reset, but let's keep going. And I'm saying that because we've had a rebound in prices. So all of the deflation that we had last year is almost gone. It's not gone, but it's almost gone. We need to get back to a place where housing supply and housing demand are back together and where inflation is down low again and mortgage rates are low again. Maybe he's just trying to make too many people happy, y'all. Maybe he's playing this juggling act of making everyone happy. And unfortunately, if you drop one of those balls that you're juggling, it's all going to come crashing down. Then in September of 2022, Powell told reporters that we had officially entered into a difficult housing correction that would restore balance to the housing market. And we were entering that. We had massive price declines. Interest rates were super high, but again, they took their foot off the pedal. We're not really going through a difficult correction as far as the prices of houses. At the end of November 2022, Powell went a step further and said a housing bubble had formed during the pandemic housing boom. To the haters, we have our own Federal Reserve, Jerome Powell, acknowledging the housing market bubble. And what he's basically trying to do is not allow it to pop. The only thing is, guys, do you all really think that he's going to be able to do that when we've broken as many fundamentals as we've broken? And the severity of the problem gets worse because of the lack of inventory. Coming out of the pandemic, rates were very low. People wanted to buy houses and they wanted to get out of their cities and buy houses in the suburbs because of COVID, Powell said in November. So you really have a housing bubble. You have housing prices going up at a very unsustainable level. So now the housing market will go through the other side of that and hopefully come out in a better place between supply and demand. So let me ask you guys something, and if you can, comment below. Do y'all think that this is the new normal in the housing market, where essentially everyone, all of the locals are priced out, and it can potentially take you 11 years to come up with a competitive down payment? Is this the new normal, y'all? Do y'all think it is? I understand the lack of supply, and the people that are pushing that narrative, do they understand the other factors in the housing market as far as breaking fundamentals? I don't think they do. But either way, this is something that we're going to go through together. Obviously, you guys know that I'm in my own purchasing journey myself. I'm hoping to purchase at the end of this year, beginning of next year. I've extended this lease that you guys see around me. So I'm going to be your guinea pig. And other than that, I really hope you guys got some value, insights, and perspective. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.